Hi, welcome to Bloom Accounting. Today I have Tim Chan here from Coracle Marketing. Tim has brought over a decade of marketing experience and he runs his own company, and I thought it would be a great opportunity to have his presence and knowledge here today.
Thanks, Joe, for having me.
Thank you so much for being here. I personally learned the importance of marketing because I ran a brick and mortar bookstore almost over a decade ago. And I failed to allocate a percentage of sales towards marketing. Even though the business existed, I had employees, I had products, I had a mission, and I really believed what we did was for the greater good. However, if you do not have sales, you do not have a business. And hence, I thought it was very important to glean from your expertise today.
Yeah, for sure. And I remember that bookstore. It was a great bookstore.
Thank you.
For any type of business, there are two types of customers that you have. You have your existing customers, people that already know about your products and services and likely will come back again and again. And then you have new customers, people that are discovering your business for the very first time. And so when you're starting a new business, you don't really have very many of those existing businesses. And so you really need to spend on marketing to get a lot of those new clients to come in. But as a business becomes more and more established and that existing customer pool increases, you actually can pull back on the marketing that you do because now you don't need as many new customers to come in to hit your revenue goals.
And in terms of percentage of sales, what do you see from your experience is the average percentage a company should budget for?
That's a great question. It depends on the type of business that you are. So B2B, a business to business business, usually spends between 2 to 5% of your revenue. For a B2C, like a bookstore where you are a business to consumer, they usually spend between 5 to 10% of their revenue.
That's interesting. And in terms of forms of marketing, especially nowadays, there's so many different forms of marketing. What do you feel is the best and most effective? And for which purpose?
Yeah, that's a great question. And nowadays, there are so many different types of marketing to do. You really can't just focus on one or two. You really need to do quite a lot because it really depends where your customer is. And so let's go back to those two groups of customers, existing customers and new customers. You need to communicate to these two groups differently. So your existing customers, you might already have their email address. They might be following you on social media. They might come to your website from time to time. Those are three key ways for you to communicate to them. But if you are a bookstore or another retail store, you still might need to, send out flyers to them just to reach people that already even know you. For new customers, it's different the way that you communicate with them because they don't know who you are. And so you're introducing your brand, your products, your services to them, explaining to them what's unique about your business and what the price point is, what the call to action is, what they should do. And so you can still use some of those same mediums, email, social media. You can use online advertising to get to them. Videos are great because it gives you a chance to show off your products or your services or to give kind of a personal touch to them. And so there's so many variety of ways to reach either existing customers or new customers. It's a matter of getting to know who they are and what their preference is in terms of how to communicate and how to get information.
Thank you. That is very valuable. What type of marketing metrics should a business be keeping track of?
There's a lot of marketing metrics, but the two that I really encourage business owners to get a good grasp on are customer acquisition costs and the customer lifetime value. And these two metrics come hand in hand and they relate to each other. So a customer acquisition cost means how much marketing spend or effort does it take to get a new customer to sign up or to buy your product. And so you would take your whole marketing budget that is spent towards reaching new customers and then measure how many new customers are coming in and divide that amount and you get a number. Now that number in itself isn't that helpful. You really need it to compare it to customer lifetime value. And so customer lifetime value is the total amount that a customer is going to spend with your business over that relationship. And if you don't know how long a customer might stay with your business, typically you use 2 years. So how much will they spend over 2 years? So for example, if you're a coffee shop and you have a customer coming in buying a $3 coffee once a week, you take that multiplied by 52 weeks in a year, you get 156. And then over 2 years, that's $312. So that would be the customer lifetime value. Now, let me give you an example about how kind of you can compare these two numbers together. So we ran a marketing campaign for a distribution company, and we did some Google ads, we did some SEO, and we measured that the amount of marketing spend it took to get a lead coming in was $15. And so it took $15 for someone to come to the website, fill in a form, and request a quote. But not all those requests turned into orders. And so on average, 50% of the people that requested a quote actually bought the product. And so the average value of the product was $300. And so $15 to get a lead, 1 out of every 2 leads turned into a customer. So that's $30 is your customer acquisition cost. Now you compare that with what they purchased, $300. And this product was a product that you only buy once every maybe 3 or 4 years. And so we only really counted that one order as their lifetime value. So $300. So you compare the customer acquisition cost, $30 to $300, and you think, oh, was that worth it to spend $30 to get a $300 order? Well, if your margins are decent, and this company's was, over 30%, then definitely makes sense. But if it ended up costing, let's say $150 to get this new client, and they only bought $300, well, you're actually losing money on, that order. And then it doesn't make so much sense anymore. And so those two metrics compared to each other are ones that I encourage business owners to get a good grasp on.
Thank you so much, Tim, for being here and reinforcing that we really need to have a good grasp on our financials and budget for marketing, especially understanding our gross profit on our products we sell or services, and also our bottom line.
Thanks for having me, Joe.
Thank you so much.